Hi, my name is Agustin Palupi. I come from Trisakti School of Management, Jakarta. Today, I would like to present my research. The title of this research is Does ESG increase the WOM value? The suitable concept developing in industrial worlds make stakeholders consider ESG performance in measuring company value. By disclosing sustainability report on environmental, social, and governance aspect, it is imperative to increase the company's value and demonstrate its sustainability capabilities. Based on 2015 CFA Institute research, state that only 24.7% of investors did not consider ESG in their analysis and investment decision. So, this study aimed to provide empirical evidence about the effect of ESG performance on WOM value in Asia countries, which are developing countries with high exploitation of natural resources. Grand theory in this research using signaling theory. Spencer states that companies reporting to inform, analyze, and investor about the company value. Manager do signaling because there is information that the company only know, but it is believed that the information is relevant and suitable to disclose. Therefore, the manager tell the info he has because external parties do not know it. Manager who have confidence in the equality to their company, bearing in mind that the cost incurred for signaling will be more significant for companies with poor quality. This is previous study between ESG performance and WOM value. So, my first hypothesis is ESG performance of the company has a positive impact on WOM value. The second relationship between environmental performance and WOM value based on this previous study. So, my second hypothesis is company environmental performance has positive impact on WOM value. My third hypothesis from this previous study is corporate social performance has positive impact on WOM value. And my last hypothesis in this research is corporate governance performance has a positive impact on WOM value. The sampling method in this study was carried out by purposive sampling with the following criteria. First, the company listed on the stock exchange of each country in Asia with from 2019 until 2021. Second, listed companies that disclose environmental, social, and governance performance and sustainability report. Third, listed company that have an ESG score rating by Thomson Reuters. Fourth, company in the non-financial industry, bank, non-bank financial institution, securities company, insurance, mutual fund, and others. And the last, listed company that do not have a negative value on the company equity. Okay, this is my research model. And this is the mathematic model. Okay, the result of the research we can see in this table. In the model 1, ESG score have negative effect on WOM value. It is consistent with the model 2, which is we can see the environmental, social, and governance consistently negative effect on WOM value. And The control variable, we can see the growth and the size has a positive impact on worm value, and then leverage doesn't affect on worm value. So, the study results state the ESG score and environmental, governance, and social score prove that the significant negative effect on worm value. It means that the higher score, the lower the company value. It is possible due to the company's goal to maximize stakeholder wealth through ESG policy. Sakil state that better environmental, social, and performance action require the higher cost for their implementation. It gives an unfavorable signal to investor behavior. Many investors will consider costly activity to reduce financial performance in the short term. As a result, investors are less interested to investing, resulting in decreased market demand. Thus, better ESG performance will result in the lower firm value. Control variable, growth, and company size prove that have significant positive effect on firm value. It means the higher the sales growth, the larger the company size will be a good signal to increase the company value. The results of the study provide evidence that ESG score and environmental, social, and governance score prove to have a significant negative effect. In developing country, environmental performance is considered to require high environmental costs. It is an additional company expense considered burdensome and will worsen to company financial condition. The company is not an entity that only operates for its interests, but must also provide benefit to its stakeholder. Adopting ESG issues in the company policy in a way to provide signal and meet stakeholder expectation. Investor can use this research to make decision by considering aspect of sustainability and a control function for the community. Recommendations for the future research are: first, adding other relevant control variables to control country level effect to make a better model. Second, conduct spirited tests for countries that dominate the number of companies in Asia to have ESG assessment. And the last, expanding to coverage of the sample area. Okay, that's all my research. I'm Agustin Palupi. Bye.